It's Education Friday from the land down under. I keep on trading no matter where I am, but how do you know which currency pair to trade? Today's question is from Jeanette, who has been following the current affairs of Australia, the US, and the UK. She asks, what's the best currency to trade? Should I avoid trading the Aussie dollar now that the Australian economy is having difficulties? Stay with me as I identify the best dancing pairs on the Forex dance floor. As I have covered in our previous videos, there are 7 major currencies that are most commonly traded globally, and you must always trade them in pairs. You can make money on the rally as well as a down market, so your choice wouldn't depend on how well the economy of your currency of choice is doing. Your profit depends on what position you take on the specific currency pair. Active traders might get into the trading positions with all these 7 currencies throughout a given trading day, while long-term traders would pick and choose when the best opportunity arrives. I will devote this response to traders like Jeanette, who is more of a conservative trader and balances trading with her career and her role of a mother of 2. In our previous video, I covered the best days to trade for long-term traders. Let's say it is a Tuesday and you turn on your computer looking for some delicious pips on the Forex dance floor. Here are some steps that you can take. 1. Open up your chart with a minimum of 7 currency pairs, major or minor. 2. Check out investiva.com for trading ideas and the latest market news. 3. Listen to your local economic news and quickly scan the economic calendar for upcoming risk events. 4. Narrow down your currency of choice to 3 to 4 based on the economic events. This one depends on your own schedule. If you're able to monitor the markets frequently, you can pick the currencies whose economy has an upcoming risk event. If you're going on a vacation and won't be able to follow the markets for a while, pick a currency whose economy is showing a more stable future. Do the same for the cross currency. 5. Sometimes it works best if you pick a currency with a higher volatility against a currency that has been showing consolidation. This way, you have better odds to identify the trend of the pair. Keep in mind that these are all probabilities and trading is never 100% certain. What we're doing here is making the odds in our favor. 6. Return to your charts and do a quick technical analysis on your selected currency pairs to find the trends or ranges. By doing this, you can narrow your choices down to the one currency pair you feel most comfortable with. 7. Polish your technical analysis on this pair and calculate your risk tolerance to set your stop and limit orders levels properly. This will enable you to get into the market with confidence, knowing that even if the pair changes direction from your open position, you won't lose more than you can afford. 8. Trust your gut feeling. If after all this you don't feel safe getting into the market, then don't force yourself. Remember, when you're having fun trading with a positive attitude, the rewards are greater than just money in your pocket. That was my A to your Q, Jeanette. If you're unsure of any other terminology that I just used, please head over to investiva.com, where you will find the answer to many of your questions with Investiva's education course that consists of over 100 education videos. Otherwise, teach your questions to @Investiva, or if you'd rather keep it private, book your one-on-one online trading lesson with me today so you can get answers to as many questions as you may have. Trade responsibly and don't forget that only you can take care of your money the way it needs to be taken care of. So, get yourself educated.